Okay, today we are not going to talk too much. We just want to talk about the finance bill once again. The reason why I'm talking about the finance bill once again, or the Finance Act 2019 once again, is because of the tension of students that finance bill 2019 may come out in the exam. And so, excuse me. Excuse me. So instead of us to wave it aside, we want to talk about it again. And the foundation level taxation, one of the basic questions that is being asked is about basis period as it relates to assessable profit. And we know that in basis period, we have the commencement rule, the change of accounting date, and the cessation rule. We won't be dwelling too much on the old bill or the old act. We will be talking more about the new act. And I'll be using this circular from the FIROS to explain what is on ground. Now, this is a clarification on commencement and cessation rules. We'll not be talking about business reorganization, so let's limit ourselves to commencement and cessation rule. This circular is issued for the information and guidance of the general public, taxpayers, tax practitioners, in line with the provisions of the relevant tax laws. Okay? The general public includes also students. General public also includes examination bodies that are taking taxation. Now, this information circular provides clarification on the administration of various amendments to relevant tax laws with respect to commencement of business and cessation of business. Okay? Let's look at commencement of trade or business. Okay? So we're talking about business income here. Section 29, subsection 3 of the Company Income Tax Act is amended to eliminate the occurrence of overlap in the basis period. You know, during the commencement period, when you are commencing business, you normally have overlap in the first year and second year, there will be an overlap. And sometimes in the second year and third year, there seems to be an overlap. So overlap exists in these 3 years. So this circular is helping us to clear off those overlaps. Now, the basis of assessment, okay, before we go to the basis of assessment, now, when we clear the overlap, it means that tax will be charged just once or assessed once in an assessment or in a basis period. The basis period for commencement of trade, okay, section 29 of CETA as amended clearly proves that the basis of taxation is the preceding year basis. As such, the income of a given year is assessed to tax in the immediate following year of assessment. So it means that any income you made in 2019 will be assessed to tax on 2020 year of assessment. Okay? Now, this puts an end to actual year basis assessment. It means any basis of assessment following this new law, there will never be an actual year basis for business income. Okay? That means that the so-called, because I will call it so-called now, so-called right of election will no longer take place as a result of the new Finance Act. Now, I want to say something that was not stated here, but that is implied here in this circular. This bill or this act is called Finance Act 2019. This means that the first basis period to be recorded so far in this bill or this act will be that of 2019. That will mean that the first year of assessment that will be enjoying this finance bill or Finance Act 2019 will be 2020 year of assessment. And since it is preceding year basis, if your tax is being charged on 2020, the basis period will be 2019. So now that we've established that the first basis period to enjoy this new Finance Act is 2020, and they'll be looking back at 2019, we are set to look at the first year of assessment. Now let's look at this. Section 29, subsection 3A of CETA provides thus: for the first year, the assessable profits shall be from the date in which it commenced to carry on such trade or business in Nigeria to the end of its first accounting period. So you see, the first year of assessment has a time duration. It has a start date, and the start date is the date the business commenced. And when is the end date? The end date is the end of the first accounting period. How do you know the end of the first accounting period? This means that your company must have a choosing accounting year end. This provision indicates that a company shall not be assessed to tax on the basis of actual profits in the year in which it is commenced. That is, actual year basis is cancelled. The profit for the first accounting period is assessed to tax in the year of assessment immediately following the year in which it commenced business. So it means if a business commenced in 2019, it will not be charged to tax on 2019 following this new law. It will be charged to tax on 2020. Look at an example. A company commenced business on 1st of July 2020 and makes up its account to 31st October. So you see, these two things must be there. The date of commencement, the date it makes its account up to. Now, what will be the first year of assessment? First of all, you need to know the basis period that it covers. The first basis period will start from 2020 of July, and since October is the account year end, it must end in 31st October of that year 2020. That means 2020 can never be the year of assessment since the basis period is 2020. It means the first assessment year is 2021. And the profits to be assessed are those of 1st July to 31st October 2020. Okay? And that's fine. We are still dealing on first year. Now, second example says a company commenced business on 1st of January 2019. You know, this is different from the one we just did, the illustration one. Illustration one says it commenced business in 2020, which makes 2021 the year of assessment, the first year of assessment. Now, if the business commenced on 1st of January 2019 and makes up its account to December 31st, so you see that the first year of a basis period is 1st January to December 31st, 2019. So you see what I told you, the commencement of this Finance Act makes 2020 the first year in which that Finance Act is going to be used. So it means that if any business is commencing in 2019, it falls under the new rule. If your business commenced in 2019, it makes 2020 your first year of assessment. If your business commenced in 2020, like in illustration 1, it makes 2021 to be your first year of assessment. So if your year of assessment is between 2020 upward or downward, it means you are following the new rule. But if your basis period is 2019, if your year of assessment, not basis period, if your assessment year is 2020, 2021, 2022, from the 2020s, your year of assessment, it means you are following the new rule. If your year of assessment is 2019, it means you are following the old rule. Now, if somebody starts a business in 2019, the old rule says use actual year basis for the first year, isn't it? The new rule says, no, don't use actual year basis, use preceding year basis. And so business starts in 2019, you can no longer use the old rule to start your business counting from the actual year profits. You use the new rule, which makes 2020 your first year, which is in line with the new rule. But if your business starts from commence in 2018, of course, 2020 cannot be your first year. 2019 also cannot be your first year. So you see, it follows the old rule. We will talk about 2018 later. But suffice it to say that to commence this Finance Act, 2020 is the first year of implementing the Finance Act. And so when we are implementing the Finance Act, we are looking at preceding year basis. So 2019 becomes the first basis period. So it means that if a company is having a basis period ending on any date in 2019, let's say it started from April 1, 2018 and ends in March 31st, 2019, that will fall into 2020 starting of a business if the company is ongoing. That is a transition in 2020. But if it is starting, if it's a company that is just starting, if the company starts business in 2019, it falls into the new rule. If a company starts in any date in 2018, it falls into the old rule. I believe we are clear. Now let's look at the third example. A company commenced business on 1st April 2019, still showing you that the basis period starts from 2019. So you see it is in the new rule and makes up accounts to March 31st. The first year is no longer 2020. This is because The way you want to do your first year is to do your basis period first. Start counting your basis period from 1st of April to when the account will end. 1st April 2019, if it enters March here, that is March 31st, 2020. If you are looking at preceding year basis, you can never use 2020 as a year of assessment. So your first year of assessment is going to be 2021. And you see your basis period runs from 2019 to 2020. So any basis period that starts from 2019 is into the new rule. But not all basis period that ends in 2019 are in the new rule, especially if that is the 3rd year. We will talk about the 3rd year later. So suffice it to say that once your basis period starts from 2019, once a basis period is starting in 2019, you are going to use the new rule. Let's look at the 2nd year. The 2nd year, the Act stipulates that for the 2nd year, the assessable profits shall be the profits from the first day after its first accounting period to the end of its 2nd accounting period. So it means that one day after the first accounting period ends, the 2nd accounting period will start, and it will end on the 2nd year on the chosen accounting date. Consequently, the profit accessible to tax in the 2nd year of assessment shall be the profit arising in the 2nd accounting period only. That is the account immediately following that of the year of assessment of the first one. Look at the first example we've been doing before. A company commenced business on July 1, 2020, makes up its account October. That's fine. That's what we took as example 1. The first accounting with 2021 because your basis period started from 1st of July 2020 and ends in October 2020. So look at where it ends. If it ends in 2020, it means preceding year basis shows that your assessment year must be 2021. So where will the 2nd accounting year start? To start one day after October 31st, 2020, which means November 1st, 2021. So you will keep maintaining this October. Going to the previous examples we did here, if your company starts January 1, 2019, your first year is 2020, your 2nd year should be 2021, and your basis period will be from January 1, 2020 to December 31st, 2020. And if your company starts on April 1, 2019, your first year will be 2021, which means you're running from 1st of April 2019 to March 31st, 2020. Your 2nd year will be 2022, which runs from April 1, 2020 to March 31st, 2021. Now that we have established the 2nd year, we need to establish the 3rd year and subsequent years that will come after. The Act provides that for the 3rd year and for each subsequent year, the profit, the accessible profit shall be the profit from the day after the accounting period just ended. So it means that the next day after the 2nd accounting period ends, you start counting the 3rd accounting year. That is the profit of the accounting year immediately preceding the year of assessment. So going back to our example again, the company commenced business on July 2020 makes up its account to 31st October, it means that the first year is 2021. The profit basis period shall be from the first day of the business, July 1, 2020, to the first account ending date, October 31st, 2020. So you see how we are maintaining the October. The second basis period we start the next day, November 1, 2020, to end at October 1st again, 31st rather, 2021. Looking at preceding year basis is 2022. The third year would be next day after this, ending at October. So that is how you have set the ball rolling. So you can see the other examples too, where the business started in January 1, 2019. Account is ending December, we follow suit. So you've seen the basis period for the new Finance Act. We say that the new Finance Act come into play from 2020 year of assessment. So you see, even if the question is silent, and you want to show that you really understand the new Finance Act, you can explain that the new Finance Act came into use, came into operation in the 2020 year of assessment. And looking backward at to preceding year basis, it means that it's going to assess profits that has basis period ending in 2019. So that's preceding year basis. Now that we've seen that, let's look at some notes. We said before that the overlap has been cured using this new finance bill. Because if you look at this basis period we've just done here, there was nothing like overlap where one account ends, the other one takes off, where the other one ends, this one takes off. It's just like people running a relay. When you run to a point where your partner is, you give him the baton, you stop running, your partner takes up the race, run to the other partner, gives the baton, person stops, the other one continue. That is how the accounting year goes. The basis period goes, the year of assessment. So the year of assessment is like the person running. The basis period is where he starts running to where he meets his opponent, his partner, to give him the baton. No overlap. Okay, note that there will be no overlap of basis period where the profit of all the relevant years on commencement are computed in line with the new provision. Now, when they mean on commencement, means that if your first year of assessment happens to be 2020 or 2021 or 2022, if that is your first year of assessment in your business, it means all your profit, relevant years of assessment, will be computed in line with the new provision. But when you start having your first year of assessment in 2019 or perhaps in 2018, that means you will never follow fully the new provision. Now they said, however, there may be an overlap of basis period in the third year of assessment due to transitional issues. As such, the overlap of basis period may only occur in the third year of assessment for a company that commenced business in 2018. We will give an illustration. In the illustrations we have been using before, our illustration 1, our illustration 2, our illustration 1 told us that we commenced business in 2020. Illustration 2 tells us we commenced business in 2019. In fact, the first day of 2019. Illustration 3 tells us we are still commencing business in 2019. So if you commence business in 2019, you fall part of the new rules. It means your first year of assessment is 2020. Now, but what if you commence business in 2018? Now, that's where the issue is. It means you are not going to follow the new rule to the letter. It's only on the third year that you will get to transit to the new rules. Let's look how it works. Illustration 2. Here, a company commenced business on 1st July 2018. Of course, it could be any date in 2018. It could even be January 1. It could even be December 1. It could be December 31st. As long as the date is 2018, it is in the old provision. It makes up accounts to 31st October. That means that the first company's assessment falls under the old provision. And what does the old provision says? The old provision for the first year does not recognize October 31st, which you already know, which is what we have been taught in school. We normally say the first assessment year will be from the date of commencement of business to the end of the fiscal year. And that will be the same year of assessment, which is actual year basis. That is what the old provision says. So it's still the old provision applies to any company that is formed in Once again, I'm sorry. I pray the network become friendly to me while we finish this. So we're talking about the second year. It falls under the old provision because the year is 2019. The year of assessment, the basis period starts from 2019. It is different from, now you see, this 2019 year of assessment would be from the date the business starts to 12 months after. So it has elements of preceding and elements of actual. But you see, there is an overlap between the first and the second year. This is because we are following the old rule. Now, the third year is where the new rule starts. Because the assessment year is what? 2020, which is the beginning of the new finance rule 2020. So because we are looking at 2020, we'll be looking at preceding year basis. So that means it must end on the account choosing date, October 31st, 2019. Of course, it must have started from November 2018. So there's going to be an overlap between the second and the third. The overlap will start from November 1st, which is included inside here, the old rule, down to June, where this one ends. That is the overlap that will occur. And this overlap is only peculiar to any company that starts in 2018. If your company starts in 2017, you will never fall into this problem. This is because, let's say, for example, your company starts January 1, 2017. Let's say that your first year will be January 1, 2017 to December 31st, 2017. That's your first year. Your second year will be 12 months again after the business has commenced. Okay, 12 months from when the business commenced to the end of 12 months. So it will still be January 1, 2017 to December 31st, 2018. Now, 2019, the basis period will be preceding year basis, January 1, 2018 to December 31st year. You would have entered the new rule, which is 20. Of course, the preceding year basis, everything is going smoothly. So any company that starts in 2017 will never have the new rule in their commencement period. But if you start in 2018, you will have this overlap problem as a result of transition in the third year. If you start your business from 2019, you fall into the new rule because your first year of assessment will be 2020. Okay, now that we know that, let's look at the determination of the end of the accounting period. First accounting period. We've said it before. The determination of the first year of assessment and the relevant basis period shall be based on the company's accounting year end. So this is very important. We shall no longer ignore companies year end in the first accounting year, second accounting year, or first relevant year and second relevant year, like we do in the old rule. It will always be obeyed from year one, year two, year three. Therefore, the first accounting period of a company is the date of commencement to the end of its first accounting year. Subsequently, that is how it's going to be, ending on the accounting year end. Where a company submits a period that is shorter than the first accounting period, it will be prorated. If it is longer than the first accounting period, also prorated. Look at an example. Note that there will be no gap of basis period where all in July 2019 and commence business on 1st September 2019. Okay? Now, the company prepared its first set of financial statements to cover 16 months. Perhaps they don't want to just prepare 4 months, September, October, November, December. They would have just prepared from 1st of September to 31st December 2019. They didn't want to prepare just 4 months. They now prepared for 16 months. The company's first accounting year end is December 2019, not 2020 as they brought in the statement. Therefore, the first assessment year is 2019. Wow. From what we've read before, I don't agree with this statement of FIRS because they have told us that if a business commenced in January 1, 2019, the first year of assessment is 2020. So I don't believe here that the first year falls under the old provision. So it is still 2020 that is the first year of assessment, and it will be that of July 1 to, September 1 to 31st December, September 1 to 31st December of 2019. We shall call it 2020. But it's going to be for 4 months. The second year shall be 2021, which is still under the new provision, January 1 to December 31st, 2020. And the third year shall be 2022, January 1 to December 31st, 2021. They said there was a gap in between 2019, which is first year, which I am saying is they have contradicted themselves with this statement because it does not rhyme with what we read earlier. So I don't believe that there is going to be any gap. The only thing that exists is overlap of the 2018 company that started in 2018. So just ignore this gap because if your basis period is starting from 2019, if your company is commencing business 2019, you are into the new rule. So let's ignore that. Let's go to cessation of business. Cessation of business. Now, like we said before, the 2020 year of assessment is when the Finance Act starts. And so if your company ends in 2019 or in 2020, you shall follow the new Finance Act. But if your business ends in 2018, you'll be following the old act, whereby you'll be looking at penultimate year and be assessing your penultimate year between preceding year basis and actual year basis. But now, when your business ends in the basis period covered in the new act, that is in 2019 or in 2020, if it ends in 2019 or 2020, then it's covered in the new act. Where a company permanently ceases to carry on a trade, okay, ceases to permanently carry on a trade in Nigeria in an accounting period, its assessable profit shall be the amount of the profits from the beginning of the accounting period to the date of cessation. So you see, this cessation has cancelled the rule of penultimate year. In the new provision, that penultimate year will only be assessed on preceding year basis, following the new rule. So if your actual year basis, if your final year falls within the new rule, you shall no longer be doing actual year basis in the penultimate year. Now, basis of assessment. Based on the above provision, a company, okay, before we go that, in an accounting period, its assessable profit thereof shall be the amount of the profits from the beginning of the accounting period to the date of cessation. Now that's one. And the tax thereof shall be payable within 6 months from the date of cessation. Okay, so now what determines your year of cessation? What determines your year of cessation? It is the date which you are paying your filing your tax. It is the year in which you are paying your last tax. That is your cessation year. So you see, they said that once you stop cease business, you shall pay 6 months, within 6 months from the date of cessation. Okay, the date of cessation is one thing, but the due date for paying the tax determines the year of assessment. So it means that if your business ends in June and you pay in December, that means your cessation year is that same year that December falls. But if your business ends in July or August, and maybe you're paying January or February, that year in which you are paying your tax will become your year of your ultimate year. Let's look at the basis period. Based on the above provision, a company that permanently ceases operation must file tax return for the year of cessation within 6 months. The due date of filing, now you see, they are talking about the due date of filing, may fall in the year of cessation or in the following year of cessation, depending on the date on which the company ceased operation. So you see, here the date of filing is important. So these are the two things you are looking at. Now, however, if a company ceases operation between July and December of a particular year, filing of tax returns and payment will fall on the following year. But if the company ceased operation between January and June, then the filing will be the same year. There is a possibility of filing tax returns for 2 years of assessment in the year of cessation. There is a possibility that you can file 2 years of assessment in that cessation year. We shall see it. There is a possibility that you can just file in 1 year, that year of cessation, just one tax, and the year after cessation, you file in another one. All right, let's see illustration 1. Illustration 1 says, XYZ Nigeria makes up accounts to 31st December every year. That means it has been given from January to December, January to December, January to December. That's fine. Now, permanently, it ceased trading on April 30th, 2020. Okay. The relevant basis period, years of assessment, the relevant years of assessment, and the due date for payment of tax will be as follows. So for cessation, we'll be looking at basis period, due date of payment. Now, because this is 2020, the year in which it ends. See this 2020 you see here? You see this 2020? We are looking at, because the business ends in 2020, your first 2020 year of assessment will be preceding year basis, looking backward, because normally your penultimate year is supposed to be year of assessment 2019, of course, which will be looking at 2018 January, 2018 December. So your ultimate year, which is 2020, the year the business ends, you are looking at preceding year basis first. So when the account is supposed to end December 31st, 2019, that's fine. The payment due date is June 2020. So you see, your year of assessment is 2020, payment due date 2020. This is preceding year basis. Then you will still look at from January 1 to April 31st or April 30, 2020. Now you shall not call it 2021 year of assessment anymore, because it is your ultimate year. That means you are filing two sets of tax in the ultimate year. One of them is preceding year basis, one of them is actual year basis. So it's not that you are comparing the two tax to see which of them is smaller. No, you are filing two. One of them preceding year basis, which is the normal one. Then you are filing another one on actual year basis from the 1st of January, because your company is starting accounts from January, where this one ends. So when the operation ends. And if you look at it, that 6 months after April is October 31st. So by October 31st, that is when you are ceasing your operation. The last operation is you pay your tax. So you see, your year of assessment 2020, you are filed into tax. One of them on preceding year basis, and the other being cessation returns. The other one is normal preceding year basis for that year. The other one is cessation returns. In illustration 2, the company is still making up its account to 31st December every year. But you see here, it ceased business on 31st of July 2020. Now you see, in the year 2020, year of assessment 2020, it will have filed in January 1 to December 31st, 2019. That is what it will have filed as the normal basis period. But you see, the second one is supposed to be January 1, 2020, now to 31st July 2020. You see, there are one, why we call here 2020 year of assessment is because of this due date. But now we are calling this 2021 because the date for filing this due date is 31st January 2021. So in this scenario, the cessation returns falls into the following year following the year of cessation. So your normal cessation is supposed to be preceding year basis as the tax law says. Then there is what they call cessation returns, which must be the next accounting period, but must end on the cessation date. So you see, for cessation, while we are still looking at the account ending date, we are also looking at the due date of payment of final returns. We call that cessation returns. So it could happen that you are paying your cessation returns on the same year that you are making your cessation, you are doing your cessation, the year of assessment of your cessation. So what happened is that it is because you ceased business before, on or before June 30th. That is when that will occur. But if you cease your business from July 1 to any other date after July 1, your cessation returns is due the next year. So you see, 2020 is the year the Finance Act come into operation. So you see, in all our illustration, it is 2020 year of assessment that when the business ceased, it ceased on the Finance Bill, the Finance Act, new Finance Act. If it ceased in 2019, you will normally do your old Finance Act, where you will be comparing actual year basis for penultimate year and preceding year basis. But when it ceases on 2020, when it ceases on 2020, it ceases on 2020, then you know that you are no longer considering penultimate year, which is 2019, based on actual and preceding. No, because you know you have already considered the penultimate year, 2019, you have already considered 2018 basis period. And so your cessation rule, which is in 2020, would have started taking the 2019 basis period. So you're not doing your ultimate year, your penultimate year, you're not going to be doing preceding and actual anymore. It's just that because the cessation year falls into the new rule, you use this basis period, preceding year basis, then you also do the cessation returns. So the cessation returns, when the due date for paying the cessation returns, the year it falls in, that is the year of assessment for cessation returns. I believe we've learned a lot from today's class. That is just what I want to clarify, because an exam will may be silent. So if an exam paper is silent, what you should be looking at, if they give you a basis period, cessation ends in 2020, cessation ends on 2020 date, just say, all right, that is new finance bill. If the company starts in 2019, you say again, that is new finance bill or new finance act. So if your company starts in 2019, new finance act. If it ends in 2019, old finance act. If it starts in 2020, new finance act, ends in 2020, new finance act. Okay? But if it starts in 2018, you know that you're going to have a mixture of old and new. But if it ends in 2018, you know it's all old finance. So that's what I want to say. Okay, what if your company ends its operation in December 31st, 2019? Of course, the actual year basis that's the old rule to be from January 1 to December. But of course, the cessation, the final returns will be paid 6 months. So whether the final returns is being paid in the new finance bill year of assessment or not, the fact is that your tax has been fully computed. It's just the due date that is 6 months. So once your company is ending in 2019, old accounting rule. But if it starts from 2019, new finance bill, new finance act. So that's the point I just want to make. So thank you so much. If you have any question, feel free to ask. They can you can get the videos later so that you can go through and see what points you can bring. Sometimes apply the finance act as if maybe okay, they will not say that it has occurred because right now for a commencement rule to be fully done with the new finance act, it will stay up to 2021 or 2022. So they can ask you, how will the treatment be? So they're asking you in terms of futuristic. So if a company uh, commenced operations in 2019, state the relevant years of assessment, assuming the profit is so and so, so and so, so and so. What will be the accessible profit? You know how to adjust. Okay, so adjusting of the accessible profit will not be a problem as long as you know the beginning of the basis period to the end of the basis period. So thank you so much. We come to the end of the class and I wish you success. Tracy, after now, just feel free to ask me any question that in the WhatsApp group that you feel you feel to feel like you don't understand certain things we can discuss. Thank you so much once again and have a good night.